What's up, what's up, what's up, guys? Today I'm covering part 2 of support and resistance, and I'll specifically be talking about moving support and resistance as well as gaps. This is a continuation of part 1 of the series where I cover the basics of how to draw support and resistance as well as how to trade it. So if you haven't watched that one yet, make sure you click on the link up here as it will provide a super solid base for what I'm going to teach you today. These simple levels are such a powerful tool that will help you to predict market movement ahead of time. So today I'll share 2 things with you that will help to advance your predictive market powers. Firstly, I'll teach you how to draw moving support and resistance and how you can use it on multiple time frames. Secondly, I'll teach you about gaps in price action and how we can use these levels as additional support and resistance levels. But before we get started, go ahead, hit that like button and subscribe to the channel if you haven't already. And don't forget to turn on that notification bell so that you don't miss any crucial videos like this. Also, if you have any friends or family members who are new to the markets, feel free to send them over to the channel to join a community of individuals passionate about transforming their lives through the stock market. Alright, so without further ado, let's hop into it. So to recap part 1, we need to look at support as a floor and resistance as a ceiling. For our purposes, these lines need to connect at least 3 candles and act as a level of either support or resistance that price will respect in the future. Now in the last video, we talked about horizontal lines, but today I want to show you how you can add diagonal lines or moving support and resistance to your charts. So let's start with the monthly chart for Alibaba. This is actually one of my top stocks to buy for this month, so if you want my in-depth analysis of why you need to buy the stock right now, be sure to click on the link in the upper right-hand corner of this screen. Alright, so first I'm going to draw our top line, and I want you to think of this as a ceiling. So, start here. And yeah, I'm really liking that line. Look how many points it touches. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 touches to that top line. So that's a really strong level of moving resistance. And now we're going to draw our level of moving support. And I am really liking that level right here. Look how many touches this has. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 touches. That's a really strong level of moving support. So here we can see that actually these moving support and resistance lines create a channel that Alibaba trades in. So pretty much if you see the price at the bottom, you know that it's a great opportunity to go long. And price at the top means that it's a great time to go short. So let me show you the power of using moving support and resistance with the horizontal levels that I showed you in the last video. So here on the monthly chart, we can see that this $200 range acts as a very strong level of support and resistance. So let me draw our horizontal line right there. Right here in this $200 range. Beautiful level right here of resistance. Here it comes and functions as support. We have 1 touch, 2 touch as support, and now it's acting as resistance. Not only is this a great level of support and resistance on the chart, but $200, if you remember in the last video, me talking about natural support and resistance, $200 is a really strong level of natural support and resistance as well. So since the current price is currently below $200, where could the price potentially end up falling? Well, we can see here that this range right about here at 171, this is a really strong level of support because look how strong this level has held in the past. So we see resistance right here, 1, 2, 3, 4, 5, 6, 7, 8 touches of support right here, acts as resistance, 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 support, 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 support again. And now we could definitely see this 171 level come into play as a very strong level of support. So if price decides to keep falling, we could definitely see this level of 171 being super important, and we could potentially set our buy levels right around here. Now on the monthly chart, we can see that Alibaba has been on this downtrend since October. Using this, how can we see when to enter a trade? So let's go over to the daily chart and I'll draw my moving resistance right here. So I'm going to zoom out. All right. So I'm seeing a really nice line for me right here. Let me just change this to red. Okay, so check this out. This line acts as a very strong level of moving support and resistance. We can see that it acts as resistance right here. Here we can see that the price rejected off of it and kept falling all the way down to about 209 before reversing up. And look, once it broke this level, now this line acts as moving support. So even though the price kept falling, it would bounce off of this moving support and rally back up. And we can see it respecting this line all the way down here before it continues to rally up. Look, it continues to fall all the way down here. So if you see a trend forming on the monthly chart, going over to the daily chart and drawing your levels of moving support and resistance can be a really important tool to use when determining when to enter or exit a trade. All right, so let's go over to the chart of Netflix, and I'm gonna draw levels of moving support and resistance here as well. So here we can see that it has created this beautiful line right here. Look how many touches this has. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 touches right here. And then drawing our next line of moving support, you can see that we have 1, 2, 3, 4, 5, 6, 7, 8 touches. So this is a really nice channel right here. And obviously we can see that Netflix has an amazing upward trajectory, but it seems to be consolidating in this range. And I'm going to talk about chart patterns in a future video, but here we can see that this is kind of like a massive bull flag pattern on the monthly chart. And this has potential to consolidate for a little more before rallying up to the upside to the top of this channel. All right, so next let's look at gaps and how they can also function as support and resistance. So let's go back over to UPS. I mentioned this in part 1, but we're going to go over to the daily chart, and we saw that it created several gaps. It actually gapped up right here and it gapped down right here. Well, gaps can actually function as support and resistance, especially in places where levels are not very clear. So let's go ahead and put in our gap levels right here. So we can draw our first one right here. This is the top of the price action for the day before it rallied up. And we can draw our next level right here. And then we'll come over to this gap, draw our level here, and draw our next level right here. So if I had no previous levels of support and resistance on my chart, we could have drawn these levels to predict where price would move. So when UPS created this gap right here on the 26th and 27th of April, we can see that price continued to rally up, but when it gapped down, it came down to touch this gap, the top of this gap, and it rallied back up. So what does that show us? This shows us that gaps can act as very strong levels of support and resistance. Then let's go over to this gap right here. When it gapped down, the bottom of this gap is now acting as resistance. So if we wanted to play this in the coming days, we could see that it's right here at the top of this gap. So potentially we could go short on this or play puts in anticipation of it falling down to this 189 level with a stop loss right above. Also, a break in this level right here of 198 can potentially mean that we could rally up and come to fill this gap before coming back down to fill this gap that it created down here. So now let's combine gaps with moving support and resistance. So let me draw this line right here and I'll show you exactly what I mean. So right here we can see that UPS had this beautiful line that was respected so many times. So when the price decided to run up and absolutely rocket up at the end of April, we saw that it reached this point up here around $217 and it started to consolidate in this period before falling back down. We can see that price action touched this moving resistance line. And if we were to draw this line right here, we could see that it had 1, 2, 3, 4, 5, 6, 7 touches. So when price fell and we found that it had a significant level of support right around here at 195, we could see that it could rally back up. Well, where would it go to? We drew this line back here in May through June, and the price action really respected that line. So we knew that once it came back up here, once it had its nice rally up in July, this could function as moving resistance, and that it did. It held this line so strongly. Look, we have 1, 2, 3, 4, 5, 6 touches right here before it fell back down. So we can use these two tools of moving support and resistance as well as gaps and combine that with the horizontal levels of support and resistance that I taught you in part 1. And this can be an extremely powerful tool for us to use to predict price movements. So I hope that made sense to you guys. As I mentioned before, if you haven't watched part 1 of how to trade support and resistance, make sure you head on over to check it out as I cover all the basics that you'll need to draw and interpret these lines. Hopefully you all are starting to have these charts make more sense to you, and I highly recommend going over to tradingview.com to start playing with these lines. I'm interested to hear your thoughts on this video, so be sure to drop a comment down below. Anyways, thanks so much for watching, and I look forward to seeing you all on the next video. Peace.